Students, welcome to the session on advanced accounting. So today we plan to start with a new chapter that is about partnership. In terms of partnership, as you all and we are not getting into the discussion related to the admission of the partner, but at this level you are now expected to have a discussion around the dissolution of the partnership. Dissolution of the partnership means partnership is coming to an end. Okay. Now, around this dissolution, we are going to have discussion around various requirements of accounting related to this. Plus, from the examination perspective, you must be knowing that this is a very, very important chapter. And from the examination perspective, you can just always consider that in terms of getting the question in the exam, this chapter is preferred. Yeah. So you generally expect questions from this chapter. So that is the importance. So that's why I need your attention, particularly in relation to this chapter. Okay. So let us quickly try to understand what are the situations under which this partnership may come to an end. Now, there could be various reasons for this. One, it could be because of the fact that the partnership deed was agreed for a particular period. Okay, let's suppose partnership was created for a particular purpose, which was to continue for 5 years. And now that purpose is over, so that's why the term of the partnership is completed. And that is where the partnership is now coming to an end. Number one. Or it could be because of the death of one of the partners. Whenever there is a partner who is no more available, so what will happen? Now this partnership deed will come to an end. This partnership will come to an end, even though the other partners may continue, but still this existing partnership will have to get dissolved. Okay. There could be another reason for this dissolution, and that could be because of the insolvency of the partner. Now, as regards the dissolution of this firm or this partnership, once again, we can also say that there could be certain other reasons, means the one which are not related to the partner but because of the business, etc., which may lead to dissolution. Let's try to understand what could be the reasons. Let's suppose the business which is being run by the partners is illegal, or that has become illegal, or because of some reasons that will not be able to continue anymore. So now what will happen? When the business, the purpose for which the partnership was continuing, and that has come to an end, so eventually what will happen? The partnership will also come to an end. In certain cases, the court may also require the dissolution of the partnership, and that is again because of the reasons, because of the fact that partnership is not really required at all. Correct? Yeah. And we can also look at the reasons under which the court may order the dissolution of the partnership firm. Say if any of the partner has become a person of unsound mind, if he suffers from permanent incapacity, if he is guilty of misconduct of the business, in the business, when the partner disregards, okay, he's just not following whatever is agreed between the partners, he's just, not getting into it at all. When the partner transfers his interest, so that means effectively this partner is moving out. So there again, the new firm will have to be structured in terms of the partnership. When the business is getting losses and they have been continuing, and that's why the business has to be shut. Or if there is any other reason which appears to be just and equitable to the court, because of which this business should be discontinued. Okay. Yeah. Now, what are the consequences of this dissolution? Let's try to understand about the consequences. It's fairly simple. We can look at the situation of a partnership. Say there are three partners, A, B, and C. All right, yeah. And the three partners had agreed for a profit sharing ratio. Say this was 20, this was 30, and this was 40. So this was the profit sharing ratio. Means 20% of the profits went to A, 30% of the profits went to B, and 50% of the profits went to C. So this means that it's not necessary that each and every partner will have equal share in terms of the profits. Correct? Yeah. So this is called as profits sharing ratio. Now some of the terms which you'll have to just remember at every point of time. Number one. Number two, which is called as capital ratio. Now what is this capital ratio? At times it may happen that the capital which is contributed by the partners is not necessarily in line with the profit sharing ratio. For example, say A has contributed 5 lakh as the capital, B has contributed 5 lakh as the capital, and C has also contributed 5 lakh as the capital. Now, if one has to go by their capital ratios, then their ratio will come out to be 1:1. But if we look at their profit sharing ratio, it's not 1:1, because if we go by the capital ratio, it's equal for all the three. But it's not the case for ratios based on profit sharing ratio. So which shows that it's not necessary that the partners will have their ratios of profits in line with their capital ratio. It may vary. At times it may be same, at times it may vary. So it doesn't matter. Clear? Yeah. This ratio will have an important role to play as far as this dissolution is concerned. So that's why it's important to have the understanding around it. And I'm sure that in the course of your studies related to admission of partner, you would have understood all of these points. Yeah, but anyway, this is important. Next aspect is about the capitals of the partners. Now, around capitals of partners, this one point which is generally a matter of confusion. So that's why we can talk about it. We can say that the capital of the partners are of two types: fixed capital and current capital. Okay, yeah. Now, what is fixed capital? Say, for example, A contributed 1 lakh as capital in the firm, B and C also contributed 1 lakh as capital in the firm. Yeah. After that, after their contribution of this fixed capital in the firm has been running the business, the firm has been getting the profits, the firm has been running into losses. So a lot of things have been going on. Okay. And all of these profits, losses, etc. are getting passed on to whom? Are getting passed on to A, B, and C. So basically, they will also have a running account with the firm. At times, both these accounts, the running account and the first amount which they contributed in the firm, may be maintained in a single ledger. You can say there could be one ledger. In such a case, what will happen? Fixed capital and the current capital of the partners is basically mixed up into a single account. But at times, it may not be mixed up. At times, for this fixed capital, the partners may be maintaining the separate accounts. And for this current capital, the partners may be maintaining a separate account. If we talk about this fixed capital, the fixed capital is something which remains fixed. It doesn't change. Even if there are losses, etc., they will just keep moving into these current capital accounts. Okay, and at the end means when the partnership firm will come to an end, at that point of time, any of the losses in relation to the current capitals will get transferred to the fixed capital, or any of the profits over here will get transferred to the fixed capital, which will then get distributed back to the partners. Clear? Yeah. Now in the question, it will generally be specified whether the current or the fixed capital accounts are required to be kept separate or not. Okay, so because this is one of the points which may be a confusion to all of you, so that's why please note down all of these things. Now this was all about partnership. Now let's get into the understanding related to the dissolution of the partnership. Now, as regards the dissolution of the partnership, we are now looking at a situation when, let's suppose, C becomes insolvent, or let's suppose A wants to move out of the partnership. When A wants to move out and B and C want to continue, let's suppose C is not insolvent, the other case. Let's suppose B and C want to continue, but A wants to move out. So what will happen? Earlier, whatever understanding which they had was amongst all three. Now this understanding in any case is required to be changed. So that's why anyways the partnership deed which they had will have to be changed. So that's why in such a situation, this partnership deed will come to an end, and maybe after this comes to an end, B and C may continue, or they may not continue. Yeah, but currently we are talking about a situation wherein any of these situations will lead to dissolution of the partnership firm. Okay. Then I think Keshav is facing some disturbance. Keshav, I think you need to check at your end. But I'm assuming it's all good activity. Huh? All of you may confirm, huh? It's all fine. All good in terms of video and audio. Quickly, please. Yeah. Quickly, please confirm it's all good in terms of audio and video. Yeah. So I see some disturbance. Is it all fine? Okay, I think there is some disturbance students are facing. Can you please get this checked? Okay, so I understand it's all fine. All of you please quickly confirm. Yeah, it's all okay. It's all okay. Yeah, all right. So then we can move further. Okay, so students have confirmed it's all okay. Perfect. So I think you need to check connectivity at your end, maybe some of the students who are facing this problem, because all others have confirmed it's all fine. Yes, that is what I also think. Yeah, no problem. Okay, now moving further, I would suggest all of you to get on to page number 2.6 of the study material. All of you, if you can refer to page number 2.6 of the study material. See, for the purposes of our discussion, we will be referring to study material quite a lot. So that's why it's very, very important. You can just refer to that study material. You may also have this presentation on the screen, but if you will have the study material available with you, that will be better because you will be able to understand the things in a better manner. Anyways, if you don't want to open the study material, then we have this presentation also, but it's better if you access the study material, please. Okay. Now we are getting into the accounting requirements at the time of closure of partnership. So when this partnership will get resolved, what will happen? In simple terms, we can say that when the partnership will come to an end, the books of accounts of the existing partnership firm will have to be closed, wherein all the assets of the partnership firm will have to be sold off. All the liabilities of the partnership firm will have to be paid, and whatever is the residual amount, because of this, whatever is the residual amount, if that happens to be a surplus, that will get distributed to the partners. Or if that happens to be a deficit, then the partners will have to contribute that amount, and which will again be dependent on the partnership deed which they will have. Okay. So let's try to understand how will this distribution really take place. And for this, we can look at one example on the study material. And that's why if you can just continue on this study material, there's an example on page number 2.7 now. There's an example. So we can refer to this balance sheet of Fast and Quick as at 31st of December 2000 XY. Correct? Yep. So we have this balance sheet of Fast and Quick. And what is this Fast and Quick? It's a partnership firm. The balance sheet is available to us. So we have assets, then we have some provision for doubtful debts, then we have liabilities, loan, capitals are also there for Fast and Quick. Okay. Quick is written along with Fast. So capital of the Fast is 30,000 and for Quick it's 25,000. Okay. Now moving further on to this, Fast and Quick share profits in the ratio of 3:2. So their profit sharing ratio is what? Fast and Quick, their profit sharing ratio is 3:2. On 1st of January 2000 X2, the firm was dissolved. Means the balance sheet is available on the date when the firm got dissolved, which is a good thing. Yeah. The firm got dissolved on this date. Fast took over the patents at a valuation of 5,000. Now, when the balance sheet will have to come to an end, so all the assets will have to be sold off. And at times it may happen that some of the assets of the firm may be taken over by the partners. So those are not getting sold outside. Instead, the partners will take them over and partners will contribute for this. Means partners will pay the amount for this. So it can either be paid in cash by the partners or the partners may get this adjusted in their account. It's one and the same thing. So in this case, Fast took over the patents at a valuation of 5,000. So you can just look at the patents, please. In the balance sheet, it's given. You need to just keep referring the question, please. Huh? Okay, and that's why I told you it's very, very important to have access to the study material. And you just let me know if there's any concern which you have been facing. Okay, now moving further. All other assets which got realized, their values are also available to us. All other assets which got realized, their values are also available to us. Okay. Plant and machinery was realized for 45,000. Stock was realized for 22,000. Sundry debtors were realized for 18,500. And the total amount of realization came out to be 85,500. Okay. Then further, if we move, it says sundry creditors were paid at a discount of 5%. Means sundry creditors have also been paid, but when they were paid, 5% was the amount which was not paid. So an amount was paid to the extent of 95% only, which is again okay. And it's not necessary that each and every penny in terms of assets would have been realized. For example, if we look at the assets in the balance sheet which are made available to us, patents had a value of 6,000, correct? Patents had a value of 6,000 if you look at it, but the partner Fast took it over at 5,000. So that means 1,000 is short, correct? Okay. Then if you look at stock, its value was 25,000. If you look at stock, its value was 25,000, but this has also realized only 22,000. Correct? Now, in terms of the plant and machinery, if you see, 40,000 is the amount in the books, but this has realized additional amount. It's 45,000. Okay, yeah. I see some differences in the amounts which you have shared, which is fine. So that's why I'm saying it's always better to refer the study material. Now, as a first step, what do we need? As a first step, we need to prepare the realization account. A realization account will have to be prepared. Now, in terms of the realization account, what do we do? In terms of the realization account, the first step will be to transfer all the assets which are there in the books of the partnership firm at the time of dissolution to the realization account. So all the assets that we have, what do we do on this date? We will transfer this to the realization account. So we'll just simply do this transfer to sundry assets. Now in terms of sundry assets, what do we have? Plant and machinery, 40,000. Then we will say patents, 6,000. Then we'll have stock, it's 25,000. Okay. Then we have sundry debtors. Sundry debtors are 19,000. Yeah. And similarly, all the liabilities that we have. Now, in terms of liabilities, what do we have? Sundry creditors. So those will also get transferred by sundry creditors. So this will be 20,000. Then we have any other liability. If you go back to the question, it's the loan of fast. Okay, yeah, it's the loan of fast, but that's the partner loan. And if we look at any other liability, so we don't have any other liability. But if you look at one point of the question, it talks about provision for doubtful debts. Now, whenever there is a provision for doubtful debts, what do we do in such a situation? Whenever we have a provision for doubtful debts, we will keep it on the credit side. So that's why we will keep provision over here. By provision for doubtful debts, 1,000. Now, in terms of the accounting entry, what will be the accounting entry if we have to fast that? Realization account debit to all these assets. Why? Because all these assets got realized. Correct? This is one. Secondly, in respect of all the liabilities, what is happening? All the liabilities are coming to an end. Clear? So I have this query from Ashima. Ashima is asking, sir, when we realize it on book value or the realized values? This is something which will be specified in the question. Whether you are realizing them at book value or the value other than book value, that will be specified in the question. If the question doesn't specify it, you will have to assume that all of these have been realized at book values. Currently, we have not put the realized values. Currently, we have put the book values. Why? Because we have transferred the book values to the realization account first of all. So that's the first step we have taken. We have not realized any of these assets. Okay. Now the realization will start. So let's see how the realization starts. Now, as around all of these assets, we are given a total amount of 85,500. Correct? 85,500. So we will say buy cash. This is because of realization of assets. So 85,500. So all of these assets got transferred over here and cash has been generated. And that cash which has been generated has moved to realization. Clear? Yeah. So this is first step. And these are what? These are the values which have been generated from the realization of all of these assets. Next. Moving on to the next point, and that is about creditors. Now, if you look at the value of creditors, it was 20,000. 5% is the amount which is not getting. 5% is the amount of the creditors which will not be paid to them. Yeah, which will not be paid to them. So what do we do with this? We will say to cash sundry creditors, and they will be paid at 95%. So what's the amount which will be paid to them? 20,000 into 95%. So this will be 19,000. So the creditors have also been paid off. Creditors have also been paid off. Assets have also been realized. Clear? So all of this is done. So are we left with anything else? Let's understand. The question specified that the realization resulted in some expenses. Now, all of these processes which are going on, assets are getting realized, liabilities are paid off. So there must be certain expenses because of this realization. What do we do with that? Those expenses will have to be incurred and those will also get transferred to the realization account. So we'll say to cash realization expenses. Now all this money which has got generated, yeah, that will get reduced with this part. Now in the question, what you should always do is, see, because of the space, currently I am preparing this realization account, then I'll move on to the cash account. You should prepare it parallelly. Every time, please remember that you should prepare the cash account parallelly. If the capital accounts of the partners are required, then you should prepare that parallelly. If those are not required, then you should prepare that parallelly in your working notes. So all of these accounts will have to be simultaneously opened, and all of these accounts will have to be used at every point of time in case of dissolution. Okay, clear? So now with this, we are done. Except for one thing, that these patents of rupees 6,000, they also generated some value. If you look at it, they also generated some value. Correct? And this value is not included over here. And what happened to this? One of the partners fast took it over at a valuation of 5,000. Yeah. So what do we say? Reduce the capital of fast. So we'll say by fast capital account, patents taken over 5,000. So this 5,000 is also additionally generated. Clear? Yeah. Now what do we do? Now as regards the realization, everything is done. So we can just come to an end to this realization. So if you can just take the total of these two, please, and let me know what's the total. So the total for these two come out to be 1,12,500, and this amount will be shorter. This amount will be shorter. Now, if this amount is short, if the total of this is less than this, so what do you mean? It would mean that there is a loss. Net there is a loss. And this loss will get distributed to the partners. Who are the partners? Fast and quick. So this will get distributed to the partners. Fast and quick. Okay, so I'll just sort of align this. So what's the loss amount? If you look at the total of this side, it comes out to be 1,11,500. So the loss amount happens to be 1,000. Now this loss will get distributed in their profit sharing ratio. So 600 goes here, 400 over here. So this becomes 1,000. And what do we get? 1,12,500. Okay, yeah. Simple and easy to do realization account. So this is the first step you will think of or you will get into whenever we talk about realization of assets. So it's the first step. Okay, so the first step will be to prepare the realization account. That means to distribute or to do away with all the assets and liabilities. Yeah. Now I can get on to some queries. I can see some of your queries. And all of you, I would suggest if you have any queries, just please let me know. Ishika is asking, sir, why did you credit provision for doubtful debts? See, in the realization account, you will keep gross amounts. If you are taking sundry debtors at the gross amount, then you will take it to the credit side. Okay. Saksham is saying, sir, why the cash is not realized? So the cash is realized. Huh? This is the cash realized. This is the cash paid. So cash is realized. So I think maybe your query came earlier. I would suggest all of you, I think some of your queries were related to the points which were to be discussed. So maybe that's why you had this confusion. Saksham is then asking, sir, the loan of the partner, past loan of the partner, which was equivalent to 10,000. Why has that not been transferred to the realization account? See, you will not take the loan of the partner to the realization account. That will get settled separately. Okay. Akansha is asking, so the cash has not been transferred. No, because you will not pay cash or receive cash. Cash is cash. So there's no point getting the cash or taking the cash into the realization account. When we'll move on to the next step, that is about preparation of the cash account, you will understand. Okay, don't worry. Akshay is saying, sir, explain the format of realization account. So this is the format of the realization account. See, there's one way you get into the technicality of just learning the format. I would not really want you to learn the format, just try to understand the concept. It's very simple. Transfer all the assets over here, all the liabilities over here. Whatever is paid off, that will be paid from this account. Whatever is realized, that will be realized from this account. And the net amount at the end, whether it's a loss or the profit, will get distributed to the partners in the profit sharing ratio. Okay. But still, if you are looking at a format, you can just refer to page number 2.6. You can refer to page number 2.6 of the study material. A specimen of this realization account is made available. Okay. Bhargavi is asking, sir, why do we adjust patent from capital account of fast? This one, it's specified in the question. If you look at the question, it's specified over here. Okay, then I think Aditya, your response has reached me. I think Ishika, I answered your question. Vijay Shankar is asking, sir, what is the nature of this realization account? See, realization account has been prepared for realization of assets, for paying off liabilities. Very simple. Meghna is talking about fixed and current capital. We'll come to that. Don't worry, Meghna. Anyways, we'll have a lot of discussions around it. Vasudha is asking reason why PBD is credited. What do you mean by PBD? Okay, this one, provision for bad and doubtful debts. Because we are taking the gross amount of debtors. That's why. Then Chukapu is asking why was the general reserve not taken? So you will not take the reserves over there, only the assets and liabilities will go. That's why. Saurav is asking, general reserve will get transferred to the capital account? Yes, of course. Ramkumar is asking, if nothing is mentioned in the payment for liability, then we should assume that it will be paid off? Yes, of course. Paid off, and that too at book value. See, but I can understand from a lot of your queries is that there are many points which we have not yet discussed, and you are jumping onto those points. I would suggest one thing. Let me get done with this entire part related to realization. Okay. After that, I'm sure 90% of your queries will get over. So far, we have only prepared the realization account. There are other accounts which are also required to be prepared. Let me get done with that account. After that, let's put down your queries. Otherwise, you will end up spending hundreds of your queries and I will not be able to maybe answer all of them. So that's why please be very, very specific in terms of the topic that we have discussed. Something which we have not discussed as yet, please wait for this and automatically you'll get the response. Okay. Vikas is asking unrecorded asset and unrecorded liability. So I'm not sure where is this coming from. There's no point getting into it. Tejas is asking, sir, this realization is a nominal account. What do you mean by nominal account? It's an account for realization of asset and paying of liability. Okay. General reserve will not go to realization account. Janki is saying, sir, first of all, we are transferring the balance sheet items and then we are transferring the adjustments. Yes, that's correct. But in terms of the balance sheet items, we are only transferring the assets and liabilities, nothing beyond that. Fine. Yeah. Now, as the next step, let's see if we move on to the cash account. Now, again, as I told you, the next step will be to prepare cash account and of course the capital accounts. See, both of them should run parallelly. Currently, because of the space constraint, I am not preparing that parallelly. We'll go one by one. We'll go one by one. I'm just keeping the cash account over here. And I'll just try to bring in one of the capital accounts, okay, for the purposes of our understanding. So let's suppose if I am able to bring in fast capital account. In the exam, please remember that you should prepare this very, very nicely. You should write completely the cash account. Then you should write particulars, amount rupees, particulars, amount rupees, debit and credit all. Okay, that is how you'll have to approach this in the exam. For the time being, I'm just doing this in the interest of time. Now moving on to the cash account. Now one of your worry was, sir, cash we have not transferred to realization account because there is no need. There is no need. Cash is cash only. What's the point of putting the cash in realization account and taking it out? No need. Now cash account, is that available in the question? Yes. It's starting with a balance of 6,000. So we'll say to balance brought down 6,000. And let's look at the capital account of fast. Has he got any balance? Yes, it's 30,000. So we'll start with his balance also. By balance brought down 30,000. Okay, it's 30,000 for fast. Clear? Okay, now what's the next step? Cash has been realized from the realization of assets to realization account, 85,500. Now, when the assets got realized for 85,500, one entry will go to realization account, other entry will go over. Clear? So that is how accounting entries are getting completed. Now, clear on this? Number one. Secondly, if you look at the realization expenses, the payment of creditors, that will also get adjusted here. So we'll say buyer realization. And I'm just for the purpose of your reference writing it. Buyer realization, there were expenses. So cash will be paid. Buyer realization. Liabilities. That was sundry creditors which were paid off. 19,000. Correct. Now the accounting entries have got completed. by looking at them in various accounts. And please remember that in the exam, it's not necessary that you will be required to prepare these accounts. It may be that you are asked journal entries, and the journal entries are all available. If you look at the solution, it started with journal entries only. I didn't go to the journal entries because there's no point getting into the journal entries. That's very, very simple. Important thing is the ledgers which are required to be prepared. Okay. Now this is done. Now what's the next step? Now the loan of FAST needs to be paid off, which didn't go to realization account. So what will happen? The loan of FAST will get cleared, and against this cash will be paid off by FAST loan account. And what's the amount? It's been paid at 10,000. Correct? It's been paid at 10,000. Correct? Yeah? Okay. Moving further. Do we have any adjustment related to cash? No. So I understand all the adjustments related to cash are over. But anyways, we'll wait for some time. I'm not just closing the cash account. We'll wait for some time. Now what we can do is we can move on to the capital account of FAST. Okay. Now, as regards the capital account of FAST, we understand that FAST took over one asset, that was patents, because of which his capital got reduced. So we will say to realization account 5,000. Correct? To realization account 5,000. Do we have any other adjustment? Yes. And what's the adjustment? The loss of realization will also get transferred to the capital account. So we will say to realization loss. This was 600 for fast and 400 for quick. So 600 has also got transferred over here. By chance, I have not been able to prepare the capital account of quick because of space. But same way, you should prepare it. In the exam, keep space for all these accounts and they should go parallelly. Otherwise, you will face two problems. One, time shortage. Because if you prepare one by one, then the time will become shorter for you. You need to do this fast. That's why prepare parallelly. Secondly, you may miss out on some entries. Maybe an entry has been passed in realization account, but that has not been taken to cash, and you'll just keep searching for that entry. So it may become difficult. Okay, yeah. Now moving on to the next transaction, that is about reserves. Now reserves have not been distributed. If you'll see, the reserves have not been distributed. So what's the next step? We should distribute the reserves to both these partners. So the reserves will get transferred to the partner's account by general reserve 10,000 in the ratio of 3:2. So this becomes 6,000. 10,000 in the ratio of 3:2. 6,000. Clear? Yeah. Now we are done. As regards the adjustments given in the question, we are done with everything. Now what's the next step that we need to follow? The next step will be to close this capital account. So let's now try to understand that when the capital account of FAST will have to be closed. So is it that he has got any surplus or has he got any deficit? So let's try to check that. Now in this case, the total of this side is 36,000. and this side will of course be 36,000. So therefore he has got surplus. So what will he do? He will take away cash in relation to this surplus. 30,400. Oh, so with this, what has happened? Because he has taken away cash, so we'll have to pass an accounting entry in cash account also. So what do? We will now say by fast capital account 30,400. So the account of capital of past is now done. It's done and dusted. It's closed. So what we can do now is we can look at the capital account of quick. Cash is still open. If you'll see, cash account is still open. Correct? Now quick will also get similar sort of thing. I think the balance of quick was debit. So the opening balance of quick was debit. No, it was also credit. So this is 25,000. Yeah. General reserve will also get transferred to quick. So 4,000 will be the share of quick. Correct? 4,000 will be the share of quick, and he will also get the share of realization loss, that was 400. Okay, but there was no adjustment in relation to patents, etc., because he didn't take away any assets. So now if you look at his account, this is 29,000, and this should also 29,000. This should also be 29,000. So what will happen? He will also take away cash. So his balance will become 28,600. So this is what? This is a balancing figure. And over here we can say by quick capital account 28,600. Here, so account of quick is also over now. Account of quick is also over now. Yeah. Now what are we left with? We are left with the cash account. So let's just try to see whether any balance remains in the cash account or not. Can you give me the total of both these sides quickly? Can you give me the total of both these sides quickly? All of you. Quickly, please. Can you give me the total? Yes, I'm waiting for a response. Can you give me the total of both these sides? I think this becomes 91,500. Is that correct? This becomes 91,500. And let's just check it. What's the total of credit side? Yes, quickly. What's the total of credit side? Okay, great. Sakshi, Aditya, Radha, Meghna, they are all getting 91,500. Very good. So what does it mean? If the total of both the sides are matching, that means cash account is also closed. So nothing is left. And this is the ideal situation. When we will close the capital account and the cash account, they will get closed simultaneously. And it's also a kind of check for you in the exam, that whenever you will close the capital account, the cash account will automatically get closed. Why? Because any of the cash will get distributed to the partners. And this cash was appearing against the capital only. So if the capital has got distributed, then there will not be any cash left after this. So by chance, if you are still left with any cash, so that would mean that there is some mistake. Clear? It's a kind of check. All of you clear on this? Any questions, any doubts in case you have on this? Now you may let me know, because now we are done with Move part of this realization. There are a lot of adjustments which we need to discuss over and above what we have discussed now. But before that, it will be good to have a discussion around your queries. Okay. Any questions, any doubts in case you have, please let me know. So whenever the partnership will come to an end, so these are the three things you need to do. One, prepare realization account. Number two, prepare cash account or the bank account. Number three, prepare the capital accounts of the partner. These are the three steps which you have to remember always. Over and above this, there are certain adjustments which will have to pass, or there are certain important points in relation to all of these accounts. Now we can move on to all of those points one by one. Okay, okay, clear? Yeah. Vasudha is saying now the concept is clear, sir. And Aditya has also understood this. Great. So now on this concept, there are many other points which you'll have to remember. And I can also sort of give you certain steps for the purposes of your understanding and for the purposes of solving questions in the exam. Okay, so I'll just tell you all of these points, but if you want to understand and look at all of these points, those are also given on page number 2.8 of the study material. Okay, so what's the first step? Vaishnavi is asking, sir, when there's a difference between debit and credit, how we will adjust the difference of the cash account, you are saying? Yeah. After the closure, very simply, you'll have to revisit your question because there must be a mistake. It's a kind of check. So the first step is to open a realization account, transfer all assets and liabilities over there. That's the first step which you have to follow. As around transferring all of assets and liabilities, you will transfer all assets and liabilities except cash. And this transfer will take place at book values on this. Yeah. Clear? Okay, great. So this was the first step. Number two. Step number two. As I told you that all of these steps are also available on this page. So if you don't want to note it down, it's available on the study material, page number 2.8. Next step is transfer of liabilities to outsiders. And provisions. Sorry, this was only assets. Huh? and provisions and reserves against assets. So you will transfer all of them. These will also get transferred at book values. This is the next step you'll have to follow. Now in this case, there is a note. It says if there are any accumulated losses or profits which are negative, those will not get transferred to realization account. Accumulated losses, they are like general reserve. They are not transferred to realization account. Clear? Step number 3. Step number 3. What's the step number 3? Realization account should be credited with any of the assets sold. Realization of assets taken to realization account. Realization means sale or asset taken over. So if there is any asset which is sold or taken over, what do? You will then take it to realization account in terms of generating the cash or in terms of reducing the capital of any partner because of this. Okay, clear? Heath is asking what to take the sale value of assets if nothing is mentioned. Book value straight away. If nothing is mentioned, consider that to be book value. Yeah, these 3 steps are noted. Next, step number 4. Expenses of dissolution. Expenses of dissolution or realization taken to realization. This was a simple point. Yeah. Radha is saying, sir, general reserve is not accumulated losses, it's rather accumulated profits. See, what I'm trying to convey is that when you look at the accumulated losses, they do not represent any sort of liability. They are like your losses. They are like your reserves. They are like your debit balances of the P&L. So you should treat them similar to what you are treating, similar to what you are doing for general reserve. That means take them directly to the partner's capital account instead of routing that through realization. Ashima is asking, what is the use of realized values mentioned in the question? We will ignore? No. We have used it. I'm not sure as to why you specified this, Ashima. Please go back to the realization account. Please go back to the question. Maybe you're missing something. Okay. Clear? Now, what's the next step? The amounts which are paid to the creditors or the liabilities. Liabilities paid, settled, taken to realization account. Settled, paid, taken to realization account means those are paid through realization account. Means paid through realization account, because the assets which have been sold, if those have been generating any cash, that was taken to realization account. So similarly, if the cash will go out, that will also be routed through realization account. Number 6, step number 6. So what's the next step? Now at this stage, I understand the realization account is over. Okay. Now at this stage, realization account is over. Close the realization account. Any profit or loss in this account taken to partners' capital accounts in their profit sharing ratio. PSR is what? Profit sharing ratio. Okay. Clear? Clear on this point? What's the next step? Next step will be partners loan. If any, will be paid. Next step. Reserves, whether positive or negative. Whether positive or negative, transferred to partners' capital account. Okay. Reserves, whether those are positive or negative, they are transferred to partners' capital account. Yeah. Now comes the most important point, and I need your attention. The most important point will now come, and this is very, very important from examination perspective. So this last point which I am writing is extremely important. If you have any questions, any doubts around this last point, please ask me, because this last point will help you significantly at the time of exam. Now, after doing all of these things which we have just noted down, discussed, capital account of the partners or capital accounts of the partners will show amount due from or to them. There may be some amount which is due to them, or there may be some amount which is due from them, depending on whatever is the case. Accordingly, partners will pay or receive and once this is done, the cash and the capital account once this is done, partners capital accounts and cash account will be closed. They will be nil. I call this to be very important part, because what may happen is that at the time of examination you will have very little time to revise most of the stuff. Correct? It's very little time to revise. So that's why during the exam or at the time of examination, please remember that this is your check. In a way, you will be able to check whether your solution is correct or not. Because if after closing the partner's accounts, some cash balance is still pending, that means a mistake has been made. Very simple. Okay, clear on this? Yeah. Saksham is asking, can the fast loan be taken to the fast capital account? No. Fast loan will be settled separately in the form of fast capital account. You generally don't take it to a fast capital account unless it's specified in the question. Because if the question will specify something, then you'll have to follow that, irrespective of whatever is the step. Whatever question will ask you to do, you will do that. But generally, you will not see that getting transferred to capital account. It's settled separately. Okay. Clear on this? Yeah. Now, as around these steps, there are certain very important notes which are given on page number 2.14. So now I would suggest all of you to please move on to those points or the notes. Those are basically, I would say, the points to be noted in continuity. So all of these points, 1 to 9, are your steps for the realization account. Okay, these are nothing but your steps for the realization account. So in terms of your steps towards the realization account, you can just say the notes. Okay, in your notes, which you must be preparing, or maybe you are planning to prepare, you should just continue with these notes also. Clear? Yeah? Okay. Note number 1, or I'll just make it A or B or C or D, something like this. If any of the assets are taken over at values other than book value by the partner or the partners, then take such value for the purposes of realization of that asset. This means when the patent was appearing in the books at 6,000, but it was taken over at 5,000. So what do? You will take it at 5,000 and not at 6,000 in terms of its realization. Okay, clear? Next, the balance of cash at the end will or should exactly be, will or should be exactly equal to balances of capital accounts, and which will then be settled. Okay, so it's also a kind of check for you in the examination. Akhil is asking, sir, are these notes required to be written in the exam also? No. All of these notes are for your purposes only. They have got nothing to do with examination. You are not required to write any of these notes. They are only for you, for the purpose of your understanding, for the purpose of your revision. Okay. Clear? Yeah. Now moving further on to this, and that is about the usage of ratios. So far, in the example that we picked up, we used profit sharing ratio, correct? So that's the ratio which we used. But it's not necessary that this ratio will be used everywhere. And for this, I would suggest you to go to page number 2.16. Consequences of insolvency of a partner. And let's read this point. The first para. Now, this first para you should mark as very important. Consequences of insolvency. This first para you should mark as very important. Okay, yeah. So I'm just reading this first para. I'm not just writing it over again. Unnecessarily, it will lead to a duplication. So let's understand what does it specify. If the capital account of a partner is in debit, means instead of credit balance, it was a debit balance. After his share of losses or profits have been adjusted therein, the firm will not have sufficient cash or assets to pay the amounts due to other partners until the amount is repaid by the partner whose account is in debit. Because if the partner has got a debit balance, that means firm will have to receive something from him instead of paying it. And this shortage of the firm will not really help the firm in terms of paying the other credit or the other partners. So now what's the consequence? This partner should therefore be asked to bring the cash, and which will then be distributed to other partners. Okay, number 2. Because the partner has got a debit balance towards the firm. So the partner will be required to bring in cash, and which will be paid to other partners. Number 2. However, if the partner is insolvent means he's not left with anything. He doesn't have anything left with him. There's no money left. Let's suppose if he is insolvent, the amount will not be realized. Of course, if he is insolvent, will he be able to pay anything? Not at all. In such a case, a deficiency will be created. Why? Because money is receivable from a partner. He doesn't have amount to pay. And if the money is not received from the partner, then there is deficiency in terms of paying the amounts to other partners. So let's see what do we do with this deficiency. And this deficiency is something which is Very important for the purposes of your examination. So it says, in such a case, the deficiency may be borne by the solvent partners, the other partners who are solvent, in their profit sharing ratio or according to the principle settled in Gardner versus Murray case. That means, what was this Gardner versus Murray? Deficiency would be borne by the solvent partners in proportion to their capitals and not in their profit sharing. So when this deficiency will come in, so this case will have to be referred. And what does it require? Very simply, it requires that deficiency, such deficiency would be passed on to the partners. So let's suppose there are three partners, A, B, C. Okay. C has become insolvent, and because of his insolvency, there's a deficiency of, let's suppose, 1,000. There's a deficiency of 1,000. Now, if you look at their profit sharing ratio, this was 1:1:1. But if you look at their capital ratio, it was 2:1:3. Now this rule says, or now the requirement is that if there is a deficiency because of insolvency of C, then such a deficiency of 1,000 will have to be contributed by A and B. But this contribution of A and B of this amount of 1,000 will not be done in the ratio of profit sharing ratio. This will be done in capital sharing ratio. Capital ratio. Clear? All of you? Clear on this? So there are many more points as around the loss which will arise due to insolvency of the partner, on which we can move after the break. So this request has also come, and anyways we were about to take a break, so don't worry at all. We will now take a break, and after the break we will continue with our discussion in relation to loss arising from insolvency. Okay, so let's take a break of 10 minutes, and after the break we'll continue. Hi, welcome back. So we'll now continue with our discussion. I've received a few queries around this deficiency, and in terms of bearing this loss in the capital ratios, I would suggest that please wait for some more time and let's discuss certain more points to get some more clarity or to understand some more points around all of these things. And then we'll move on to your queries. So moving on to the next point, this is on page number 2.17. This talks about losses which arise from insolvency. So let's understand what are those additional points that we will have to consider in case of losses which will get generated and when there will also be an insolvency of a fund. While we discuss all of these points, one thing we should not forget is about those three basic requirements: cash account, realization account, and the capital accounts at the time of dissolution. So those will continue to remain same. It's just that within those accounts, we are looking at different type of adjustments which may arise in all of these situations. Okay. So now moving on to this part, maybe you can just refer to this page number 2.17 of the study material. Okay. When a partner is unable to pay his debt, which is due to the firm, he is said to be insolvent because he doesn't have the money to pay. And the share of loss is to be borne by the other solvent partners in their capital ratios. When it says in line with Gardner versus Murray, so it means in the ratios of the capitals of the solvent partners. Okay. Moving further. The determination of the capital ratio has been discussed below. So what are those points around the capital ratios that we need to consider? See, as we discussed that the capitals of the partners could be of two types. Fixed capital and running capital, which is also called as fluctuating, or we can say current. It's something which is running. So I have assigned various names to this, but in the exam you will be given the name of all of these capitals. So don't worry about it. See, if the partners are maintaining capitals at fixed amounts, then all the adjustments regarding their share of profits, interest on capital, drawings, interest on drawings, salary, etc., are done through current accounts. If they are maintaining these two separately, then all the adjustments which are sort of happening on a daily basis or quite frequently, those will be routed through these accounts and not through this fixed account, because fixed is fixed. Okay. But if the capitals are not fixed, and the transactions related to drawings, profits, all of these adjustments are routed through capital account itself, means the fixed capital account itself. Then in such a case, what will happen? In such a case, we will not be preparing the current capital accounts. Next, if the partner or if any partner has a debit balance in his capital account, but he is not insolvent, then he cannot be called upon to bear the loss on account of insolvency of another partner. So there's also an illustration based on this. I'll just tell you the illustration. Just give me 1 minute. The illustration which follows. So we are talking about a situation where A, B, and C are three partners. C has become insolvent. And there's a deficiency of 1,000. Now, who will bear this deficiency? A and B, and in their capital ratios. But let's suppose B has got debit balance, A has got credit balance. In the situation when both of A and B had got credit balances, this 1,000 would have been passed on to both of them in their capital ratios. But if B has got debit balance, then any loss which gets generated due to insolvency of other partner. So this 1,000 is arising due to insolvency of C. Then it says in such a case, this 1,000 will not be contributed by B. This will be contributed by only those partners who are having credit balances. Clear? Yeah. So this is one adjustment which, if required, it's not necessary it will always come, which if required you should remember in the exam. And all of these points I'll just tell you before we move further. Next situation. Next situation is about insolvency of all partners. Let's suppose all the partners have become insolvent. Then what do we do? What are the considerations when all the partners have become insolvent? When the liabilities of the firm cannot be paid in full out of the assets of the firm as well as personal assets of all the partners, then all the partners are considered to be insolvent. So if you look at the firm, there's a loss. Now this loss should be contributed by whom? Three partners, A, B, and C. And we are talking about a situation when even if their personal assets are not sufficient enough through which this loss can be covered up, then what do we say? All these partners are insolvent. Okay. Under such circumstances, it is better not to transfer the amount of creditors to realization account because the assets are not sufficient enough to pay off the liabilities. That's why we'll have to assess what do we do with those liabilities. And this assessment will be done after the realization. So you will not see the transfer of liabilities to realization account in such a case. And in such a case, creditors may be paid the amount available, including the amount contributed by the parties. And why don't you transfer the creditors or the liabilities to the realization account? Because we are not sure as to what is the amount that would be payable to those liabilities. Because whatever will be left out, that will be paid to those creditors or those parties towards whom the firm carries any liabilities. The unsatisfied portion of the liabilities is transferred to capital account of the partners in their profit sharing ratios. Then the capital accounts are closed. In doing so, first close the partner's capital account, which is having the worst position. The last account will be automatically closed. Okay. Another point. Which is important for your consideration. Just give me 1 minute. Okay, next point is about PF of the employees. So to your notes, you should add this point. So I don't remember the note number. I think it was A or B. Another note you should add. Employees PF amount will always be paid through realization account. In full, even if it is not mentioned in the question. Let's suppose in the question you get to see employees provident fund, but it's not specified as to what is the amount of employees provident fund which has been paid. So what do you assume? You will assume that their PF amount is paid in full and that will be routed through realization account. Okay, clear? Yeah, clear on this? Now what we can do is we can now move on to the next part, and before I move on, I'll just let you know certain illustrations which you should definitely look for your homework. So this illustration number 2 All of you, please note down your homework. Illustration number 2 is 1. This is your homework. Then the next one, illustration number 3, and then you should also pick up, I think this is illustration number 6. Let me just quickly confirm you. Yes, illustration number 6. Illustration number 2, 3, and 6. You should note as your homework. On the basis of the example that we have solved, on the basis of all these notes that we have discussed, all of these points will help you in terms of getting to the solution. Anyways, the solution is available in the question also, but I would suggest that you should first of all practice it yourself. Even if you don't understand, just try to practice it. Even if you are not able to solve it fully, don't worry, solve it partly or solve it with mistakes, full of mistakes. Let it happen. And after that, you should go to the solution, because that is the best way to understand all of these concepts that we have discussed today. Clear? Yeah. So now we'll move further on to piecemeal payments. Piecemeal payments. So let's try to understand about piecemeal payments. What do we mean by this? We will also get on to an illustration to understand about its application. See, in the example that we had, we looked at the realization in one go. You remember the realization amount of the assets? Realization amount of the assets, it was 85,500. Remember? Yeah, this was 85,500. And what did we do? We went to the realization account, and in the realization account, we assumed, in fact, the question specified that all the sundry assets have been realized. But let's think of a practical scenario. Is it practically possible for a business to sell or be able to sell all of its assets in one go within a day? Do you think it's practically possible? No. Practically, it's not possible for a business to be able to sell all of its assets. It's not that it doesn't want to sell. It may be wanting to sell on day one, but it takes time to sell all of these assets, to realize the money from all of these assets. Otherwise, what will happen? Those will be sold. So it's easy to sell in a day, but that will result in a significant loss. Okay. So if the actual value has to be realized, so maybe we may have to wait for the right buyer to come who can then pay the right price for this. I said that in that example, 5,000 was also added to the realization, which is true, but that was taken over by the partner. So if the partner wants to take over, they can take over either all the assets or some of the assets, but that's very easy because that's internal to the partnership firm. But we are talking about the practical challenges which arise because something external to the partnership firm is required to be done. Now in this situation, let's try to see what's the best way to deal with this. See, practically, you will see that the assets are not realized in one go. They are realized on a piecemeal basis. They are realized on a piecemeal basis. Piecemeal means on a particular day, some assets will be sold. Then after some time, some more assets will be sold. After some time, some more assets will be sold. And that is how it will keep going on. It will not be done within a day or so. Yeah. Now in this situation, what do you do? In this situation, when you are realizing the assets, how do you realize the assets and how do you distribute that realization? Because what was the objective of preparing the realization account? To distribute the realization amount from that realization account to pay the liabilities, and whatever gets left out to pay the capital of the partners, because partnership has come to an end. Now, when this piecemeal distribution, so this piecemeal realization will happen, so what's the way to deal with this requirement of paying the liabilities and distributing to the partners? So in this case, a couple of methods are available. So the first method is called as maximum loss method. Okay, let's try to understand how does this method really work. This method says every realization, each realization is considered as if it's the final payment. Let's suppose we have assets worth of 10 lakhs and we have received 2,50,000 rupees. The remaining amount is pending because that will come after some days. So in this method, what do you assume? You will assume that this is the total amount of realization and nothing more will come. You will assume only this amount to be the total realization. That is the outstanding assets and claims. After this, 7.5 lakh worth of assets are considered as if they will not be realized. It's a loss. And accordingly, those are adjusted. And this will be best understood with the help of an example only. So that's why we can move on to one illustration now to understand this concept. Illustration number 7. And this is page number 2.32. Okay. So let's move on to this illustration. We are given the balance sheet of ABC as at 31st of December 2000X1 when they decided to dissolve the partnership. Liabilities are given, assets are given. Assets realize the following sums in installments. In the first installment, 1,000 came. In the second installment, 3,000 came. Then 3,900 and so on. All in all, total realization amount is 34,000. Expenses of realization were expected to be 500, but ultimately they amounted to rupees 400 only. Ultimately, they amounted to rupees 400 only. So there were a savings of rupees 100. And where is that saving taken to? That is included in this fifth realization amount of 20,100. Okay. Next, show at each stage the cash which has been received and how it should be distributed between the partners. The profit sharing ratio of the partners is given to us. It's 2:2:2 1. So that's the profit sharing ratio of the partners. All right. Yeah. So let's begin with this. And let's try to understand how should this really take place. Now, in this case, a couple of things will have to be considered. First, we will have to understand that in the given case, there are two liabilities. First is the liability towards the outsiders, and second is the liability towards the partner. So as a first step, what do you do? Whenever any realization will come, we will pay the liabilities. Okay, we will pay the liabilities. Yeah. So let's see. In this case, we will look at the particulars. Then the realization amount. And then, of course, the three things which are required to be paid. Creditors, partners loan, and of course, the last thing is partners capital. These three are required to be paid off. Okay. And I'll just reserve some space for the purposes of distribution. How this distribution should really happen. So the first realization is what? 1000. So the first realization is 1000. So let me just pick up the first realization. This is 1000. And where do you take it? The first realization will be taken to creditors. So creditors are paid off. Correct? We also understand that there was a cash balance of 500. So you may be thinking, sir, with this 1000, we also had 500. So why 500 is not being paid to the creditors? Because whenever we do this realization, we will also have to reserve the realization expenses. So this cash of 500 we are assuming is paid towards realization expenses. So we are left with 1000 and that's been paid to the creditors. So creditors are paid to the extent of 1000. So creditors are still pending to be paid 1000. So the next realization will be 3000. Second realization is 3000. Now what do we do? 1000 out of this will go to 1000 out of this will go to creditors. So now the creditors amount is 0. Now what do we do? Now we will clear the loan account of the partner. This is loan. So this 2000 will be used for paying the partner's loan. So this amount is also gone. Correct? Now we'll move on to the third realization. So the third realization is what? 3900. Now do we need to pay the creditors? No, they are paid. And this amount is 3000. So where will this 900 go? To the partner's capital. So this 900 will go to the partner's capital. Then the fourth realization will come. Fourth realization is what? 6000. Where do we take it? This will also go to the partners. And then the fifth realization of 20,100. This will also go to the partners. Okay. So all in all, if we look at the total, this is 34,000. This is 2,000. This is 5,000. And this is, I think, 27,000. So this is how distribution has taken place. Rama is saying, sir, what about the balance in cash of rupees 500? As I told you, that has not been considered over here. Why? Because that's gone towards realization expenses. Clear? Okay. Now, all this distribution has taken place. So we are done in terms of the distribution. But this 27,000, as and when it is received for the partners, will also get distributed to the partners. So in this statement, what have we done? In this statement, no doubt, we have shown the distribution of this realization completely. But how will this 900, 6,000, 20,000, 100 be distributed amongst various partners? Means A, B, and C is not available. So that is something we'll have to see. Yeah. So what do? Now we will do a distribution of realized amount to the partners. We have three partners, C, B, and A, and this is total, and we can also have some space for quantities. Now, at the first instance, we will write their capital accounts, 15, 18, and 9,000. This is 15, 18, and 9,000. All in all, if you look at the total, it becomes 42,000. Okay. Now, first realization towards the partners is what? 900. In this third tranche, 900 is received to be distributed amongst the partners only. So in this case, what do you assume? In this case, we assume that, let's suppose if this is A and this is B. So A minus B, 41,100 is the loss. Why are we considering this to be a loss? Because this method says that only what is received is considered to be the realization, and whatever is not received, we will assume as if it will not be received, and this will be considered to be the loss. And what do we do with this loss? This loss will have to be distributed in the profit sharing ratio. So let's distribute this. This becomes 16,440, 16,440, 8,220. So that's the loss. Okay, that's the loss. So this becomes 1440 negative. This is 1560 positive. And this is 780 positive. Rama is saying, but sir, we didn't do anything with the realization expenses. Rama, I think you are getting confused. See, initially 1,000 has been taken. Why? Because 500 has been spent out of cash balance. Okay. And later on, what did they realize? That out of 500, only 400 was spent. So 100 was left. That has been added over here. And there's a note in the question around this. Clear? Ayush is asking, sir, if we have huge amount of cash, even after paying the realization expenses, then those will be paid towards all of these things. simply. Rama is saying, so the total capital is 49,000. How did you consider this to be 42,000? I think you are looking at something wrong, because to my knowledge, the total capital is only 42,000. Please revisit the question. Huh? Okay. Now let's move further quickly. Huh? Now, deficiency of A's capital. Now, this A has a deficiency. Deficiency of A's capital written off against those of B and C in the ratio of their capital. Now, this deficiency of A will be borne by who? Will be borne by B and C. And this deficiency of A will not be borne by B and C in their profit sharing ratio. No, instead in their capital ratio. So deficiency of A borne by other partners. Capital ratio. In capital ratio. So what's the capital ratio? 2:1. 18,000 is to 9,000. 2:1. So what do? We will just distribute it to these two partners. So this will become 960 and this will become 480. Okay. Yeah. So that is how it will be distributed. Shekha is asking, can we distribute cash to partners' capital first and then the no? First of all, the liabilities, the external parties are to be paid always. Okay. Saurabh is worried about the number of marks in the examination in terms of weightage. See, the weightage of this partnership is huge. Huh? So you should just simply expect that one question will be expected out of this. Okay, clear? So now what are we left with? So we are left with 600 and 300 over here. 600 and 300 over here. Clear? Distribution. So this is the distribution. And this is only the first distribution which has taken place. Okay. Now, what I'll do is now I'll continue with this distribution. And I'll clear this part. After this 900 got distributed, what is the next amount which has been received? 6,000. So I'll now continue on this. And please remember the amounts which have been realized. We'll just follow the same format. So this is C, this is B, this is A, this is total, and we have the particulars over here. And now we are talking about second realization of 6,000. Now, in terms of second realization, what do we do? Before we get into the second realization, we should look at the balances. So, what are the balances that we have? Total balance was 41,001. Why? Because 900 has been paid. Now, if you look at A had a loss of 1440, which was borne by B and C. So the capital of A will remain as 15,000. B had 18,000, but eventually, because of the loss which was borne by B, out of 1560, he could not take away this. So B took away 600. B took away 600. So what are we left with? 17,400 for B. So this is the amount which he took away. So his capital is reduced to this. And similarly for C, it's 300. So he is left with a capital of 8,700. Correct? Clear? Radha is saying, sir, ultimately we are assuming the realization expenses happening to be on the very first day of realizing assets. Yes. So you can just say we need to park the realization expenses on the very first day. Otherwise, the realization will not be possible. Ashima is finding this to be very easy, and this is actually very easy. So if you look at this entire course curriculum of this subject, this is very, very easy. Huh? There's nothing typical in this. It's just that you need to understand the concept very clearly and just don't try to mug up the things. Just try to understand the concept. You will not find this to be difficult. Vijay is saying, sir, how do we know whether to use profit sharing ratio or capital sharing ratio? See, that is on the basis of your knowledge. Please remember that in the notes we have covered all of these points. Everywhere you have the notes. So you need to just memorize where do you use capital ratio and where do you use profit sharing ratio. It's not capital sharing, it's capital ratio. So in the exam, please mind it. Now the next thing which has come is 6,000. Now once again, what do we think? We will assume that the balance amount is loss. So 35,100 is the loss. So this loss will get distributed in profit sharing ratio. So this is 14,040 loss, 14,040 loss, and this is 7,020 loss. Okay, clear? Then what are we left with? 960. This is 960. This is 3360. This is 3360. And this is the last one is 1680. In this scenario, do we have any deficiency of any partner? No. So all these three partners will take away these amounts. Simply distributed. So this part is also done. Now comes the third realization. Now comes the third realization. At the time of third realization, what's the balance? Balance is 35,100. And this will be 15,000 minus 960. So this will be 14,040. This will be 17,400 minus 3360. This is again 14,040 and this will be 7,020. Okay, so these are the balances. Now, what's the amount which has been realized? 20,100. So that means 15,000 is the loss. And this will again be distributed in their profit sharing ratios. 6,000 is the loss. And 3,000 is the loss over here. So here we get 4020. And here we get 8040. Here we get 8040. So these are again the amounts which are all positive, which get distributed. Okay, yeah. Rama is saying, understood, sir. Please ignore the earlier question. No problem. Mustafa is saying, so if the loss of A is borne by B and C, then it should be deducted from their capital? No. See, when they have borne this loss, so what are they left with? Whatever was the amount which they could take away, they will have to leave the amount to this extent. So the balance amount they will take away. Okay. Clear on this? Yeah. So now, if we have to summarize this completely, What do we do? So we can just say total capital was 42,000, 15, 18 and 9. 15,000, 18,000 and 9,000. And 3 distributions took place. Correct? Those 3 distributions amounted to 600 and 300. Total amount paid. So for A, total amount paid is 960 and 8040. This is 9,000. How did we get it? 860 plus 8040. Okay, I'm just showing you the working. For B, it is 12,000. And how did we get 12,000? A got 600, then 3360 plus 3360 plus A got 8040. Okay, these 3 amounts were paid to B. C got 6,000, which comprised of 300 plus 1680 and 4020. These were the amounts paid to these 3 partners. Okay. Now, all in all, total amount paid to these 3 is 27. And you can check it. 20,100 plus 6,000 plus 900. So 27,000 is the total amount distributed to all 3. Now, what is the third thing? What is the third thing? Third thing is the deficit or the loss, which they will have to bear. So what's the loss amount? 15,000 is the loss amount. 15,000 is the loss amount which gets distributed to the partners in totality. And if we look at it individually, it's 6,000 for A, 6,000 for B, and 3,000 for C. Correct? You can also see that actually their losses have been in their profit sharing ratio, because that's been the pattern in which they have distributed their amounts. They have absorbed the losses. Correct? Clear on this? Now I'll just go back to the discussion that we started with in respect of this method. In this method, every tranche that we receive, we assume that no further amount so we'll be left with only that amount. After that, nothing more is going to come. So that's the rationale on the basis of which this methodology works. Beyond this, nothing more is going to come. Correct? That is why this is called as maximum loss method. Means the maximum loss which is possible after every realization gets distributed to the partners or gets allocated to the partners. Until the time everything gets realized, same thing will continue. Clear? All of you? Yeah. Now, as regards the piecemeal distribution, we don't have only this method. There is another method which is with piecemeal distribution, and that is called as highest relative capital method. I don't think we have time today to get onto that method. So we will pick up that method in the next session only. But let me just see if there is anything more which I can tell you for your homework. And you may be thinking, no, sir. Already we have got too many questions for the homework, and those are good enough. That's true. We don't need to get into further homework for this. All right. So I think your homework for today is limited to only those illustrations that we have discussed. Okay. Now, before we end our discussion for today, let me just move on to your queries. All of those points which you may have asked and I may not have been able to answer, let's get on to those points one by one. Okay, yeah. Now you can ask me your queries, any questions which has been missed as yet. Quickly. And the other thing which I would just suggest all of you that during the course of our discussions, couple of things you should remember. If you have any query, feel free to discuss, because if you don't discuss your queries, you will get stuck later on. Number one. Number two, as around the understanding of the concept, it's very, very important that you practice questions. If you don't practice questions, then it may become very, very difficult for you to handle all of these things later on. That's why it's very important that practice questions, and not only the one which I've given you for homework. You have a lot of questions in the study material. Once we are done with any particular chapter, any of the question which remains that I have not given you as homework, or maybe we have not also considered that in the class, you should solve it. Even if the questions have been practiced in the class, you should still solve it on your own, because that is how you will be able to get a better understanding of all of these concepts. Okay, clear? And Ashima is ready to take the homework, which is good. And now I'll just do your quiz. Meghna is asking, so saving in expenses is always considered at the last installment? Not at all. This is something which the question will specify. Aditya is asking, sir, in actual practice, this piecemeal distribution is done, which make the partner share, which make clear the partner share of profit and loss? Yes, of course. See, practically, you should also think about it. Practically, just try to understand that it will not be possible for the partners to sell off everything in one go, in a day, or let's suppose in a few days. It would take them time to get done with each and everything. And that's with any business, isn't it? Same is the case for this business also. And this is not something which is limited to only few days. Let's think about the debtors, let's think about the creditors. Debtors collection will run into months, and that is how this process really works. Okay, Ishika has understood this. Great. Ishika, any more questions from your side? Any more doubts in case you have? Please let me know. In the next session when we meet, please remember that you should revise all of these points. Because if you don't revise all of these points, some of these things may not be easy for you to understand. Ashima is asking, sir, I have a query related to illustration 1. As I realized balances have given, but we took book values. Why, sir? As around the illustration number 1, we are saying that there are realized amounts. See, in the illustration, you will have to remember one thing. Whenever you look at the realization amounts in the realization account, there are two things. And again, this goes back to the concept. Whenever you are transferring the asset to the realization account, it will always be at book value. But when you will realize it, it will not be at the book value, it will be the value at which it is realized. For example, it says fixed assets, that is 5 lakh. But when this is realized, it is 520. So the realized amount is 5 lakh 20,000. Okay. So it's at realized value only. Radha is asking, sir, what's the rationale behind usage of capital ratio as against the profit sharing ratio? See, this is based on certain rulings wherein it was established that it's the capital contribution which really matters in terms of sharing of any such losses as against the profits, because profits is all limited to the profits of the business, which when get generated are distributed amongst the partners. But in terms of any deficiency, which is more of a representation of the capital and not of the representation of the losses of the business. Please understand that all of these deficiencies which we have been distributing in the capital ratios are not arising due to the losses of the business. These are arising due to the deficiency on the part of the capital of one of the partners, and that's why this has been used over here. Okay, Ashima has understood remaining things. Rama, yes, of course, I think this is what we are planning to do. Saurabh is asking, if two partners have a deficiency, will the entire loss be borne by the third partner? Yes, of course. Then I think Aditya is saying, sir, please also cross questions. See, in terms of cross questioning, I'll ask you questions and which will be based on various points, and that is something which we'll keep doing. But as of now, some of the topics which we have picked up, these are all related to some of the illustrations which are large, and these are not related to small points, but definitely we'll get into that part also. Aishwarya is asking, so why is the recorded video not working? It's coming as private video. Please help. So I'll request the admin team to look into this, and we'll also try to understand from them what's the problem behind this. Maybe in the next session, once I get to know about it, I'll be able to answer you. All right. Yeah. So with this, I understand that your queries are over, and by chance, if still I have missed out on any of your queries, we can have a discussion on that in the next session. So for the time being, we can just conclude our discussion. And I would just like to thank all of you for your time and for your wonderful participation today. And please make sure that you complete the homework before we meet next, and you revise the entire stuff that we have discussed today. Thanks to all of you. Thanks so much.